All right. Good morning, everybody. Early morning Bitcoin talk, crypto talk. Bitcoin Brandon here from California. It is Friday. Some of you guys wait all week for Friday. Thank God it's Friday. Take advantage of the crypto world. Every day can be Friday. See, who do we have on the line so far? We've got Ray Fountain. What's going on, Ray? Andrew Cobb. Good morning, Anthony Pinkston. Terry Moreno. Bill Childers. Bouger, still in Chicago. Elizabeth Lumboy. Renee Hoffman from Hawaii. Aloha. It's Friday. I don't know if you missed any, Elizabeth. I only did one last night, yesterday. And that was late night crypto talk. For those who aren't offended by the topic of sex, that was last night. If you missed it, you can go back to my page and look at it again. Interesting topic last night. Talked about Pornhub. Now, next week, I'm going to miss a lot because I'm going to be on vacation in San Francisco. So I won't be doing the Facebook Lives as consistent as I have been. But as a disclaimer, I am not a licensed financial advisor to be dispensing financial advice. I read the news, give my opinion, share suggestions, and it is up to you to make an informed, intelligent decision. 4 rules in the crypto space I live by. Number 1, education is key. Number 2, never invest money you cannot afford to lose. Number 3, always get your return on investment as fast as possible. And number 4, where do you see yourself in 3 months, 6 months, a year from now in the crypto space? What are you willing to do to make it happen? What vehicle are you using? Take action and stay focused. Don't get distracted. There's so many things in the crypto space that you can be a part of that are great, but you can't be a part of everything. You have limited resources. Now, this does not guarantee you success, but it will at least limit your risk. And that, ladies and gentlemen, is the most that you can ask for. All right, so let's go ahead and get started. Like I said, if you missed it yesterday, I did not do an early morning crypto talk, but I did do a late night crypto talk, later than normal. And that was because every couple of weeks or so, at least once a month, sex and crypto meet. It's like clockwork. So last night we covered the latest news in the sex industry dealing with crypto. So you can go back and listen to that recording. This morning we've got some new, and you know what? Nobody complained. That's a first. I think I made that disclaimer. I said, if you're offended by sex, log off right now. So nobody complained this time. Good. All right, we're going to talk about Japan, first and foremost. Good morning, Emma, Jason, Prelvis, Paul. All right, what's going on? International geopolitics, Japan. Cryptocurrency and blockchain technology may kickstart Japan's economy. And I've got 2 articles about Japan. I think they're going to be contradicting each other. So this will be interesting to read. So let me put this in the chat box. You can read along with me or just sit back and let me do all the talking. Japan's economy has struggled to reach its 1980s high growth levels. Cryptocurrency and blockchain technology may, however, usher in a new economic boom for Japan. Yeah, this is real, all right. According to Forbes, Yoshitaka Kitao, the chief executive of financial services giant SBI, mentioned at a Japanese blockchain conference in Tokyo that blockchain-related technologies will contribute significantly, not just a little bit, not just marginally, not have an impact. No. It's going to contribute significantly to Japan's next economic boom. Good morning, Don, or afternoon or evening, depending on where you are. Unfortunately, the Japanese economy has been experiencing economic malaise. In the 70s, Japan's GDP was the second largest in the world, just behind the US. While the boom continued in the 80s, Japan's economy plateaued soon after. In the early 90s, Japan suffered a lost decade of growth. Japan could, however, revive their economy with the technological boom, especially since improved mobile connectivity through 5G technology. 5G? Why is Japan always the first to be getting this super duper technology stuff? We're still struggling to get 4G connected right. And they're already on 5G? The Internet of Things and artificial intelligence are thriving industries in recent years. SBI has recently established an AI and blockchain fund in early 2018. The fund is investing $460 million from the fund into companies in Japan and East Asia. We want to take blockchain beyond financial, said Kitao. There is significant speculative demand around cryptocurrencies, why the price is going up so quickly, but people need to think about how these technologies are being used in real life and how they can improve people's businesses. Kitao believes Japan's economic boom will happen in the next few years. See, that's why we say, guys, that the window of opportunity, the sweet spot, is a good year and a half. We have a good year and a half left. So they're expecting this the next couple of years for this boom to take place. Says he senses blockchain technology and cryptocurrencies will have a significant contributing factor in the country's growth. In addition to their investments, SBI also plans to launch a cryptocurrency exchange in 2018. They have even begun mining Bitcoin Cash through a renewable energy wind farm they invested in. Kitao decided to mine Bitcoin Cash instead of Bitcoin because Bitcoin is too expensive and people are just holding it and hoping it increases in value. Aaron McDonald, the chief executive officer of Centrality, a decentralized app marketplace, is also confident that Japan and East Asia will lead the cryptocurrency and blockchain movement. McDonald's understanding comes from his successful ICO. Centrality closed $80 million via an ICO in early January. While the company is from New Zealand, almost all their tokens were purchased by Japanese investors. He said, "We're focused on the region because people in Japan are far further ahead than the rest of the world when it comes to blockchain and cryptocurrencies. If blockchain is integrated into the Japanese market, it will be a great tool and prevent the market from declining," said Tezuka Mitsuru, one of the Centrality's major investors and the chief executive officer at CTIA, a blockchain investment advisory company. Where there are concerns that Japanese regulation could stunt the growth of the blockchain and cryptocurrency industry, Japan has adapted a relatively broad approach to cryptocurrency regulations. Although the Japanese government did recently crack down on cryptocurrency exchanges, the concern was more due to numbers of high-profile heists and thefts. All right, so and this article is talking about the blockchain is going to blow up and explode the Japanese economy. Now, here's another article from Japan. And let me get this link. And while it's on my mind, Bouger, that conversation we had the other day, please shoot me the article you were talking about and the lesson, which lesson it is from cryptogenics. But you know what I'm talking about. Shoot that over to me. I got to do some research, if you would, please. All right, so now this article states, Japanese economists explains why another Bitcoin price surge is unlikely. Okay. We just had one article that said it's going to blow up their economy, explode it rather. And this one says Bitcoin price surge is unlikely. Yukio Noguchi, a famous economist in Japan and an advisor to Waseda University's Business and Finance Research Center, argues we can't expect Bitcoin's prices to rapidly surge again. In his books and in recent articles, Noguchi makes his case eloquently. He wrote a recent article in Diamond Weekly clarifying his position, but has been making his case since January of this year and published a book last December. Because it's now possible to trade on Bitcoin futures, you'll never see a rapid surge again. Noguchi points out that the price of BTC is now almost a third of what it was in December of last year. However, where is it compared to a year ago? Okay, you got to pull that microphone or magnifying glass back a little bit. He believes that because it's now possible to trade on Bitcoin futures, people will never see a rapid surge again. That's to remain to be seen. I don't know about that yet. And the reason why is because the same people that can cause the surge are the ones that's purposely holding it back right now. Market manipulation. But they're going to want profits, which means not only is it going to surge, it's going to surge record highs when it does. That's my own personal belief. But we have to wait and see what happens. On one hand, he says that because the price of Bitcoin has gone down, the cost of sending Bitcoin are now back to a level that makes it cheaper than doing bank transactions, and this is welcome. You know what? We had an emergency situation with a business partner of mine. So I had to send about a little over $4,000 internationally, but it had to be done through Western Union. This is why blockchain Bitcoin is so efficient. I've done transactions with blockchain crypto in tens of thousands of dollars almost instantly with low fees. The most at one point, I think the fees had got up to 30 or 40 bucks last year when half the Bitcoin miners switched to Bitcoin Cash and caused almost a stoppage, but a slowage, a backlog. But it cost over $200, $175, almost $300 to send $4,000 overseas, and it had to be done in two separate transactions on 2 separate days because Western Union won't allow you to send any more than $2,999. Then they needed 2 forms of ID, driver's license, then they needed my passport, and then they wanted my social security number. I'm like, really? All that hoopla and hassle when Bitcoin it does it instantly, and the fees are going to be like, what, 10 cents, 20 cents? $1, $2? That's why this is revolutionary. And I was standing there, I'm like, why am I here at freaking Western Union? But we had an emergency situation we had to take care of. So anyways, he argues that the introduction of the futures market has driven down the price considerably. This year in January, he persuasively argues that the cause of Bitcoin's price collapse was the start of the selling of Bitcoin futures. Bitcoin prices were a bubble to begin with. Wrong. And now we're seeing a return to normal values. The San Francisco Federal Bank in a report also suggested that the introduction of Bitcoin futures trading caused a price drop. That is true. I agree with that. Additionally, the market is heading towards a situation in which it will be possible to short sell Bitcoin futures, and that will also contribute to keeping the prices down. I agree. Noguchi points to a paper published on May 7th by the Federal Reserve Bank of San Francisco, How Futures Trading Changed Bitcoin Prices. That's one article I want to read. I don't think I've read that. Authored by Galina Hale, Arvind Krishnamurthy. I have read that. I did read that. Here's the key passage. From Bitcoin's inception in 2009 through mid-2017, its price remained under $4,000. In the second half of 2017, it climbed dramatically to near $20,000, but descended rapidly starting in mid-December. The peak price coincided with the introduction of Bitcoin futures trading on the Chicago Mercantile Exchange. The rapid run-up and subsequent fall in the price after the introduction of the futures does not appear to be a coincidence. Rather, it is consistent with trading behavior that typically accompanies the introduction of future markets for an asset. Noguchi insists that actually, the majority of investors are predicting that prices of Bitcoin will continue to fall, especially when some are able to make money from short selling the cryptocurrency. He also feels that allowing cryptocurrency to branch off, it makes people feel like they can get new cryptocurrency for free, and that also drives down prices. So he's talking about forks. Does he see that as resulting in a decline in the popularity of Bitcoin? Surprisingly, Noguchi believes it's a good thing. As the price of Bitcoin drops, it becomes a more attractive means of sending money. He calculated that at current prices, if you had to use Mitsubishi UFJ Bank to send money, it costs you 432 yen for any amount above 30,000 yen. But with the current value of Bitcoin, it is cheaper to send via a regular bank transfer than BTC, unless the value of BTC falls to 675,000 yen. When BTC returns to that level, it will finally be trading at what should be a normal value. On December 20th last year, Noguchi's book, An Introduction to Bitcoin and Blockchain, was published and received rave reviews. You know what? I can't say that he's wrong on most of this, but I don't agree with his assessment that it's never going to have a surge. I disagree with that part. But everything else he said is actually accurate. All right, so let's go on to another article here. Crypto service Uphold to launch securities division, list ICO tokens. So Uphold is a wallet, kind of like Coinbase. I like Uphold better than Coinbase. But what are they up to? So let's take a look. Cryptocurrency-based financial services platform Uphold has announced that it will launch a securities division and begin listing initial coin offering tokens, a move that was made possible through the acquisition of a licensed broker-dealer. The firm, which has offices in 4 countries and serves customers in more than 180, on Wednesday announced that pending regulatory approval, it had acquired New York-based broker-dealer JNK Securities. Assuming the Financial Industry Regulatory Authority approves the acquisition, Uphold, formerly known as BitReserve, I didn't know that. I just learned something new. I didn't know there used to be BitReserve. Will acquire not only JNK's business assets, but also its broker-dealer registration, which allows it to facilitate securities transactions for clients. This means that Uphold will have the regulatory green light to list ICO tokens and other crypto assets that the SEC deems to be securities. And that's precisely what the firm intends to do. We have kept a close eye on statements from global regulators regarding virtual currencies and tokens, and believe that many crypto assets, particularly ICO tokens, may be treated as securities in some cases. Uphold CEO Adrian Steckel said in a statement, "Through our new securities division, we would be able to offer sales and trading of ICO tokens and fractional equities and provide other exchange services under the oversight of the SEC and FINRA. Additionally, Uphold will make its cryptocurrency brokerage platform available to JNK clients, which the company notes will open up this service to a new group of institutional investors." Uphold is the latest in a growing number of cryptocurrency companies that have acquired established firms as a shortcut to regulatory compliance. As CCN reported, Coinbase recently made a trio of acquisitions in pursuit of the licenses necessary to offer its customers ICO tokens and other securities. As a result of the moves, Coinbase managed to acquire not only a broker-dealer license, but also the ability to operate as a registered investment advisor and an alternative trading system. Previously, Overstock announced plans to use an ATS it had acquired through a previous buyout to launch T0 as an exchange for ICO tokens and other blockchain securities. I'm going to follow this one closely. I want to see what that actually is going to look like. You know, they say it's up there. Well, okay, what is that going to look like now? All right, so let me close this one out. Let's see. Do I have one more last article I wanted to read today? Abu Dhabi. No, save that one. Okay, yeah, this is the last one. The 2018 crypto bear market, less severe than 2014, at least for now. So everybody that's thinking that this is the worst thing that's happened, the bubble's popping, it happened before and was worse than what's going on today, and it lasted for a long time. Like the dead zone. So Bitcoin prices back in 2013 touched a high of $1,236 per BTC on December 4th. And following that spike, the price dropped for more than a year, all the way to $225 per coin in June 1st, 2015. Last year in 2017, the price of BTC ran up higher, but this time reached $19,600 per coin, and it has lost considerable value since then. At the moment, mainstream media is reporting on how people who bought at the height in 2017 have lost quite a bit of their investment. But MSM has failed to report that this year's dip is less, percentage-wise, than the losses in 2013, and the extent of 19K to 6K loss has been far less severe. Back in December of 2013, the cryptocurrency community saw its first big bull run as BTC prices ran up to over $1,200 per coin. That was back in 2013. That means those who bought the all-time high realized losses of around 81.7% on June 1st, 2015, when the price tapped at $225 per Bitcoin. So imagine that. Bitcoin ran all the way up to $1,200, the people started to buy, and then it dropped to $225. The 2013 bull run was much faster than 2017, and the ATH was short-lived, as the run up to $1,200 only took a couple of months. The 2017 bull run was all year long, starting in December, when the price of Bitcoin surpassed 2013's ATH. Additionally, at the same time, BTC dominance dropped from 90% in January 2017 to below 38% earlier this year. Currently, BTC dominance is around 42%, but a big difference between 2013 and 2017 is the fact many other cryptocurrencies had their own ATHs. At the moment, those who purchased BTC at the ATH are bearing a 69.3% loss at the time of publication. So people who bought BTC after October 15th, 2017 are in the red between 1 to 65%. Purchases prior to this date still see gains. So many ask, when was the best time to get in on BTC after markets have suffered through a significant loss? At prices today, the best time to get in BTC without suffering any losses was prior to October 15th, 2017. And any BTC purchases after this time have seen a percentage of their portfolio lose value. It's one thing I always say, I don't buy Bitcoin, I earn it. The price of BTC touched its ATH on December 16th, 2017. ATH means, for those who don't know, it's all-time high. But that price did not last long. Yeah, because the very next day, the futures opened up and everything started to drop. In fact, the price was only above the 19K mark for a mere 2.5 days. So in reality, there is only a small number of people who purchased Bitcoin at this height. Who in the world bought Bitcoin when it reached over 19,000? What were you thinking? 6 days later, the price had dropped to $13,900 per BTC, and people bought at this height have lost 56%. Then again, the price jumped back up to $17,200 per coin, and investors who got in there have lost 65%. From that height of 19,600, there was a steady decline to around 6,600 on February 5th, 2018. But there were a few fake out spikes after that day. It's likely that from February 5th until the current vantage point saw most of the buying action at these prices following the intense dip. People who purchased Bitcoin at this time could have possibly purchased at highs around 11,200. But see, the people that bought it at that time, they didn't see 11,200 as a high. They saw 11,200 as a low. Hindsight is everything. But if you bought it at that price, which shows a realized loss of around 46%. The Bitcoin Cash all-time high on December 20th lasted less than a day. Most losses between December and June 2018 are around 36 to 56%. According to Bitstamp on December 20th, 2017, Bitcoin Cash touched an all-time high of around $4,385 per coin. Now, those who purchased at this height, which lasted for far less than a day, have lost around 84%. The second jump in February 2018 saw Bitcoin Cash prices touch $3,000 per coin, which indicates a loss of 76%. On May 5th, 2018, Bitcoin Cash prices touched $1,600 per coin, and this would be a loss of around 56%. The same could be said for most of the cryptocurrencies in the top 10 market caps. Moreover, if a Bitcoin Cash supporter decided to trade all of their Bitcoin 1 week after the blockchain split 1 week later on August 8th, they would have made much better gains today. If, for example, the person had 20 BTC, they would have been able to acquire roughly 209.31 Bitcoin Cash on August 8th, 2017, with prices that day at $3,370 per Bitcoin, while Bitcoin Cash was $321. If the person kept the 20 BTC, they would have roughly $120,000 at today's Bitcoin Cash prices. Meanwhile, 209 Bitcoin Cash would net them $146,000 on June 28, 2018. So far, the 2018 bear run has been less severe as far as losses, but crypto proponents are not certain this is the bottom. That's the big question. Most digital asset proponents are confident prices will regain previous levels and beyond, and surpass the all-time highs that took place in December. The problem is, enthusiasts don't know when a trend reversal will take place, and if the current price has dropped to its lowest point. The bear run of 2014 all the way until the summer of 2015 was a very long period of time. We're going on 6 months with this now, or 7 months. So far, at least for the price of Bitcoin Cash, bears haven't managed to drag the price lower than $5,700 to $5,900. I can't say Bitcoin Cash, Bitcoin. $5,700 to $5,900 per coin. They have tried to do so 3 times since the all-time high. Currently, Bitcoin Cash prices are holding an average of around $710, and prices have not dipped below the $590 range yet. Because of these factors, some traders speculate this period of time could be the bottom. But because of all the bull traps over the past 5 months, and the last bear run in 2014 was well over 12 months today, bearish sentiment may not be over. But so far it seems to be less severe than the bear runs years prior. So that's the question. How long will this continue? And what should you be doing in the meantime? Well, like I say, I'm not a licensed financial advisor, but what I will be doing is building my crypto portfolio while it's cheap. Stacking up your coins. Do what the wealthy people are doing. They're hoarding Bitcoin. They're buying as much of it as they possibly can, and they're buying it from you guys who don't understand the game, and you're getting scared and you sell your Bitcoin. They're buying it all up. And publicly they're saying that Bitcoin is a bubble and isn't real, but behind the scenes they're buying it all up. It's a game that's being played there. All right, ladies and gentlemen, that is it for this morning. It's still early enough. You guys enjoy the rest of your Friday. Have an enjoyable weekend. I may be back for late night crypto talk tonight. I can't guarantee that. We'll just have to see how the news is. Next week, I'm on vacation in San Francisco for a week, so it might be spotty at best when I do Facebook Lives. But when I come back, My foot is going on the gas, and it is game time with cryptogenics. We're going to be running. So be prepared for that. Either you're going to run with me or you're going to stand by and watch it happen. I'm looking for the runners. People say, oh, you know what? I'm going to have 100 people on my team before July is over. On my inside leg. Those are the people I'm going to be spending most of my time with. All right, everybody. You guys have a great day. Talk to you guys later on. And when I say on your inside leg, meaning your inside leg. Some of you guys have hundreds and over 1,000 people on your outside leg. Get some serious money in your pockets. All right, have a great day, everybody. If you missed last night's Sex Talk Crypto, you can go back and watch that. Late night crypto talk. Bitcoin Brandon out. Bye-bye.
Crypto Gen X.